It's Rick, Wednesday, October the 14th. Crap, only 11 days till Christmas. I'm not ready. So we'll start with the risk model didn't change at all. Today was last couple of days have been pretty volatile, but didn't do anything to change the risk model. But I think there's a couple of interesting things about the chart that I would like to point out. Up this is the S&P 500. You recall yesterday we opened above the 200-day moving average, big gap up, and then it immediately crapped all day and closed down near the lows. This morning, as you might expect with the Fed announcement coming later in the morning, it opened up pretty much where it closed yesterday. Very quiet day, drifted a little bit higher, and then at 11 o'clock when the announcement came, or at least when Powell started speaking, it plummeted a little bit. Shows up better in a 5-minute chart here, so let's just pull that up. So here's the beginning of the day right here. Opened where we closed yesterday, drifted up a little bit, consolidated, drifted down, came back up again shortly before the announcement, and then wham. And then was very volatile after that for the last 3 hours of the trading day. Now, some people might say, they say to me, Rick, you got to love this environment, all this volatility. Exact opposite. This is the last thing I want to see. What I like is small range bars, predictable patterns where I can manage my risk. For me, risk management is rule number one, and you just can't get it in this kind of an environment. It's just too hard to manage risk. So yeah, I just sort of stepped aside and watched for the rest of the day. So back to this chart, you can see here, there's a couple of things of interest here. This is the 50-day moving average. Here's the 21-day, and here's the 8-day moving average. And of course, this one is the 200. And they're getting what I call squeezed. They're all getting tighter and tighter. And this generally leads to a good move, either upward or downward. Generally, it's follows the move of the previous trend. So, and here's where it's a little conflicting. The short-term trend since the middle of October, so for 2 months now, has been up. But if I zoom back out a bit, and you look at this picture, this white line is sort of a downtrend line. So the bigger picture, this is trending down. So we're at a bit of a crossroads here. But if you look back in history a little bit, just go back here. And the last time these moving averages got really tight, here's the situation back here. Well, let's go back even a little bit further. Go back to this period here where they all just really were exceptionally tight. And then we had a beautiful move up out of that tightness. The bands got wider. Then they got a little tighter again in here. This one went counter trend, went back up, but albeit it didn't go back up very much. Then they got tighter again in here. We had a nice move up. We got tight in here, nice move down, if you call a move down nice. But you get the idea. So here's another one right here where they got really tight and then it had a great move down if you were a short seller. So these don't happen all that often in the course of a year. Here's another one here where they got fairly tight and had a nice brilliant move up to the down trending line. And so, and then here's another occasion here, and then it went down. So we're in that crossroads. This actually shows up a lot better on QQQ. So I'll go to same story though. Overall, we're in this downtrend. That makes me somewhat nervous. But when you just flash this back out, look how tight. Here's the 50, the 21, and the 8 are all just squeezed together. Now, in this case, the QQQs were a long ways below the 200. But that's been going on now for some time. The NASDAQ has been somewhat weaker than the S&P and the Dow for certain. So I would expect some big move in the next few days coming out of this tightness in the moving averages. The problem we've had, the volatility in the last 2 days bars has been so big that you can't really trade this. Normally you would look at entering a trade on the long side if it goes above this bar here. You'd have to put your stop down here, and that's a pretty big move. That's like over 3.5%. So for a short-term trade that is not without risk, that's a little more than what I'd like to see. So what I don't think we'll get it, but what would be nice to happen would be we'll get what we call an inside day tomorrow, another inside day. And so these bars get progressively tighter. And these moving averages will get squeezed even more. This will still come down a bit more. And then we rip out of here. So that's what I'm sort of keep my eye on. Yeah, there's a great quote from Minervini today talking. He does a lot of this visioning tools that we'd like to see, and it's really helped me in my trading. If I don't, I draw it out, and if it doesn't go precisely the way I draw it out, then I just step aside, don't take the trade. It's not meeting my criteria. And his quote today was, "You can't develop a skill to predict the future, but we can develop skills to trade stocks effectively, manage risk, and create life-changing wealth," which I thought was kind of a cool quote. So yeah, not trying to predict the future, but what I'm drawing out is what would make this a really good pattern, which I would then take action on. So it's not predicting this is going to happen, but if this happened, then I know what action I'm going to take. So again, I just zoom back out. The QQQs are in a similar kind of pattern. It's this is what makes me a little nervous about any move that's going to go up. It's going to get contained by the 200-day moving average and this down sloping line. So the upside potential in the short term is not that great. So we really have to manage risk. We have to find a tight stop. Again, I'm always looking for, if I'm going to risk $1, I need to have a fairly clear path. I can see I can get $3 out of it. So that's how I manage my risk. That's that. Yesterday I mentioned Bank of Montreal. Just pull that chart up again. If any of you are using an advisor, or you have some mutual funds, I'm really curious if they put you into the Bank of Montreal this month. So when you get your December statement, if I'd ask you'd kindly check it and just see if your advisors bought you some Bank of Montreal stock in this month of December, and if so, what they paid for it, or what you paid for it. If you would share that with me, that would be not useful, but just to see if my theory is correct. I just think a lot of individual investors are going to get hosed here. Hosed by the extent that they're going to stuff the stock into your portfolio at $122 when their cost base is going to be $114. So they're going to pocket like $8. That's it for that. Just quickly, nothing really happened in my positions. I only have 3 of note. They're doing basically what I drawn out. This pullback here on CVZ, little steeper than I had drawn it out. I wanted it just to come back to the top of the base. It's come back a little steeper, but it hasn't done anything wrong. So that's no worries there. GFS has come back almost not quite as far as I drew it, but very close. So this is fine. I'm looking for this to just settle in here for a couple of days, wring out the towel a bit more, and then rip to the upside where I'll buy some more. And then HWM, if I'm not mistaken, yeah, it came in exactly as I drew it yesterday. So 2 or 3 more days of sideways action, and then I'm looking for this one to rip up. If it does this, I'll be buying more. If it crashes, I'll be stopped out, and if it rips up tomorrow, I have a half a position at least, and I'll benefit that way. So that's it for now. Probably a couple of quiet days would be useful for the market to settle down, and we'll get ready for next week. But from a longer term index perspective, there's nothing to do. We're still in what I call no man's land. Right between we're not up to the 200, we're above the 50, we're really in this no man's land here. I did a quick check of some of the sectors. There are some interesting potential sector purchases. So if anybody is interested in that, just send me a quick email and I'll do up a video on those. If I don't get any response, then I won't bother. I'll just do them for myself. Okay, that's it. Cheers, everyone.